How do you do bathroom breaks on this?
It is live. We are live. It's value after hours. That means it's 10:30 a.m. on the West Coast, 1:30 p.m. on the East Coast. I'm Tobias Carlisle, joined as always by Jake Taylor, and this time our regular sub, Thomas Brazel. What's up, Tom Brazil?
High five, guys. Alto cinque. Nothing much, guys.
Where are you?
Good. I'm in Italy, as usual. It's great here. It's cheap per unit of quality.
Yeah.
So
There you go.
I'm a GARP guy.
It's garpy.
I'm embracing. It's really GARPy.
How's the
It
pizza?
actually is.
Lots of pineapple pizza over there.
Pizza. I have pineapple pizza. They do a weird thing for kids where they'll put like French fries on pizza, which I think is kind of
American
a no-no.
style.
That sounds good.
Is that an American thing? I don't know where this came from.
It's what they think Americans would want.
Yeah, I think that's what they think. And there's another one that's really funny where they do at McDonald's they put cheese on fries. But McDonald's fries with cheese, it's like, what are you doing? And that's like sacrilegious. It's like anyway, made to me.
You can get that at In-N-Out as well in the States.
Animal style.
Animal style on your fries.
Ooh. See now, but what is the In-N-Out burger? Is that like a crinkle fry or is that like a flat straight fry like the McDonald's?
It's closer to the McDonald's, but it's not
Really?
quite the McDonald's. Yeah.
It's a big SoCal thing. Honestly, I don't really get it. They're not that good. Whatever. Sacrilege.
I do like chili cheese fries.
Price adjusted, Toby. It's a good value.
Yeah.
Is that the attraction? Yeah.
Yeah.
They're like, McDonald's discovered that if you leave your potatoes sitting outside, they kind of dry off, and that makes for a superior fry. And so super fresh fries, not as good.
Guys, since we're on the topic of McDonald's, the Ray Kroc biography is phenomenal. Autobiography.
Grinding it out.
Yeah, fantastic.
That's a
great name.
It is good, huh?
Jake, you're a big reader. Not that you're not, Tobias. When I said that, I was just like, that makes it sound like no. Have you guys read this? Has anyone read it?
Yeah.
I haven't. I saw the movie.
It's just like the movie.
It was kind of an inspiration for parts of my book, actually.
No way.
Yeah.
Okay, so you really liked it. I really liked the book. It's also short too. It's like a novella type. You could read it on a plane. At the beach.
Gets to the point and tells the story.
Ideal size.
And he's got, what do you call those? This is like aphorisms. He's got these like great little encapsulations of an idea.
Yeah.
Tweets.
If you're green, you're growing. Yeah. Tweets.
Not like
tweets now.
Not like Taleb just putting all of his tweets together into a book and calling it The Bed of Procrustes.
Yeah. I thought you were gonna go Bezos at McDonald's there when you were.
Oh yeah, I saw that one.
McDonald's.
Yeah, things have got bad.
Yeah.
Bezos is at Macca's.
It's rough out there. Recession. 2 and 10 inverting. That's nothing. Bezos at McDonald's. That's your recession indicator.
There you go. What have we got on deck today, fellas?
Well, I've got a little piece that's on the Pacific Crest Trail and some hiking stuff. So that might be fun. And then how about you, TC?
I missed this last week, but there was a good note from Verdad. I don't know which of the Verdad guys it was. I always attribute it to Dan, but I realize there are more people writing there now, so I shouldn't say that. But It was on the historic discount of smalls to large. And we've had, a decade plus of underperformance, both in terms of just absolute underperformance, but they've also been more volatile through this stretch. And so the article that they wrote deals with the reasons why we've had the underperformance and what the future looks like. The 10-year forward returns have historically looked like when it looks like this.
Yeah.
It's promising.
I like it.
So you're telling
Very
me
cool.
there's a chance.
It's the same story I've been telling for about 4 years now. So
yeah. Well, how long we've been podcast? Yeah, 4 years. That's right.
4 years, something like that. It's coming up on that, I think. 3 years, 4 years.
You're due. 100% due.
Yeah, it's just like at some point the stop clock is right, and
That's
I don't
right.
know, hoping that time is soon.
TC's a genius again.
Been a long time.
Tom,
What about you,
got
Tom? You just
anything
came
special?
off the bench.
I don't
What's been
know.
happening?
I
Yeah.
guess let's see. I guess I should do the just
Let's
like
do some
trench
crypto.
stuff. Like, yeah, I was gonna say
Crypto
I was talk
winter, right?
about war like war stories from the trenches here. We could talk about the Voyager and Celsius bankruptcies. I mean, crypto
Yeah.
bankruptcies are really interesting.
Well, I'm interested. Like, I don't
So-
really understand what's going on there. So that just I like to run my little Google update on NFTs. That's got really bleak. Now I feel bad. I can't tweet that out anymore.
It's
it's-
the interest of NFTs, right? It's a Google
search interest in
Ah,
NFTs.
Yeah.
Because it's my theory that's a Ponzi that needs a big front end of suckers coming in to make it pay off. And so,
How's it look right now, Toby? That
it looks like they're going the wrong direction. Honestly, it's at the lowest levels in about 12 months. So
not great, Bob.
probably time to go buy an NFT if that's your bag.
Okay.
That's not investment advice, by the way.
I remember meeting some managers that did NFT funds like early on, and they absolutely crushed it. But I never really.
People at the start of the
it's
Ponzi's always do well.
interesting, but-
It's the people who come in later who get beaten up. OpenSea's NFT marketplace, the transactions are down 99%, which is a lot.
Really? Wow. That's
Not 100%, but can still go down another 99%
It's not
from here.
100.
So that's the range. That's my range. So anyway, sorry. What's really happening? I'm as far away
Just
as
a tourist.
Google's bridge.
Here, I'll go down. I might move to better Wi-Fi, but I mean NFTs. I think they're interesting. I mean, who's paying the crazy prices for some of the stuff? I mean, maybe some of the early projects are very, very interesting, but I don't know. I'm not like an expert on the area. I think it's super interesting, but a lot of things are interesting. So I might, I don't know, like partake in some very, very small way, but it doesn't mean I'm gonna like park huge amounts of my savings and like so Voyager and Celsius, both of them filed for U.S. bankruptcy protection.
What are they?
Basically, and the thing, yeah, that's a good question. What are they? Are they unregulated banks? Are they basically like brokers, kind of like E-Trade or something like that? Or are they something different? Are they exchanges? So that they
What do
don't,
they say they are, and what do the tax authorities say they are? Or the SEC? Like, what's the point of contention? They prefer to be regarded as unregulated, like exchanges, and the SEC and the government says maybe you're a bank or maybe you're a broker and you need a license for that.
You need to know your customer.
Show's over. You got it. No, that's it. That's basically it. They're sort of talking past each other about what they are. And I suppose the biggest crux is like, what is crypto? Is crypto a commodity? Is it a security? Are certain crypto securities and certain cryptos commodities? Are they nothing? Are they just digital assets in some weird, non-security way or something? So there's lots of legal questions here. And Toby, you're a lawyer.
If these are literally non-fungible, because that's what they're describing themselves at, right? If the NF is non-fungible. So if you're non-fungible, it's hard to argue that you're a commodity, aren't you? Because you can point out that is my individual, that's my NFT.
Well, that's NFTs. I just mean in general, these guys own some NFT portfolios, but mainly on their platforms is Bitcoin, Ethereum, Cardano, basically the top 10 cryptos that you would.
But don't we always know at every point in time who owns what? Isn't that the entire point of it? Doesn't that argue against it being a commodity?
Well, yes, that is a very good point. It's not.
Is it more like a security?
Fungible.
The prosecution rests.
Toby just like slicing me open.
I'm just, I don't know. I'm just kind of like, this is from first principles. This is like
no.
Law from 20 years ago.
I think you're probably right. But I think so far it looks like Bitcoin and Ethereum are likely to be considered a commodity and everything else is likely to be a security. And the big differentiator seems to be the decentralized nature of their origins versus, the way they originally did, kind of like an ICO, which is probably a security offering.
Yeah,
right.
It seems like
it. It's just too, I mean, it just like squarely fits within the Howey test. So it's pretty hard for guys to argue against it. But the question in these bankruptcies, of course, isn't that. The question is, so what are these exchanges or brokers? And they look a lot like brokerage. They look like E-Trade, or like maybe more like even like a bank, because did you invest and did you own the crypto, or did you own this underlying account that owned crypto, and therefore like you don't own title to it? You're just a general secured creditor. So lots of questions. And then there's a bunch of securities laws that is pumped into the bankruptcy code, or I shouldn't say pumped in, but sort of behind the bankruptcy code. So like this thing called 546C, which is a safe harbor for financial transactions through financial intermediaries. Boy, that's a mouthful. And it applies to commodity brokers and security brokers and banks, really. And so the question is like, does it apply in this bankruptcy? And then you have like custody account issues as well. Custody, how do you, and then there's perfection of security interest. How do you do that with crypto? The the Uniform Commercial Code doesn't speak to that, or it does kind of, but it's not totally clear. And they did an update to the UCC. Boy, this is really going to get like boring. I mean, everyone's going to be falling asleep. Anyway, there are lots of interesting novel legal questions that these bankruptcies are going to be looking into. And they're the biggest crypto bankruptcies basically of all time. So I find it fascinating. There's also a lot of people, unfortunately, that have gotten sucked into crypto through these vehicles. And, there's some of the stories are tough to swallow. And you kind of think like, gosh, there really needs to be a lot more regulation around some of this stuff. It's one thing for, someone to punt around and lose some money on NFT and it's all funny, ha ha ha. But when you have some Australian person who has literally their life savings, are 58 years old, and they just lost their entire life savings in this bankruptcy, and it's going to materially affect their retirement. That's not good. So there's also that side to the story. That's what's going on in my world.
How distressed are we talking for this stuff?
So the recoveries, depending upon Voyager's probably somewhere in the call it the 50 to 70 range. I mean, these are real ranges here because we don't know what the auction process is going to bring in. And then these are the holes in their balance sheet. And Celsius is a little farther behind, probably somewhere in the 40 to 50 range in terms of recoveries. So
does that just keep like puking
melting
as the price of all this stuff goes down too? Is that how it's working?
Yeah, kind of.
You're just trying to like
it
get out
depends
in
on how
front
you
of
think
it.
about it. Yeah, so some crypto people think of things in terms of only crypto, but the bankruptcy code does look at things in terms of dollars at the petition date, and then you have assets, but you're basically long crypto and it's moving around a bunch, so it's an issue. I mean, but just to back up for a second, I mean, these financial institutions getting blowing up on a loan book is as old as time. So it's not new. Yeah, that's the thing, is people are like, oh, this is it. And unfortunately, people are like, oh, some people say, oh, this might be a Ponzi scheme because the way they were doing it. I'm like, all the financial institutions and banks kind of have circularity, they have deposits and they're hypothecating them out, and then it's circling back to pay you interest. So it all kind of works until it doesn't.
Yeah.
So there are a lot of upset people, but
all banks are insolvent. It's just a matter of timing.
There you go.
Backstop by the Fed.
Yeah. See, the crypto guys don't get the backstop.
So like 50.
They didn't want it. They didn't want it.
You're paying like 50 to 70 cents on the dollar right now for roughly for.
No, us? No, those are recoveries. I mean, you can't. The market is probably somewhere in the 20 to 30 cent range for both dockets.
Okay.
Yeah.
So you might be buying a proverbial,
50 cent dollar.
50 cent Bitcoin.
50 cent dollar. Yeah. I mean, I think the cases are interesting legally, and I've been helping a lot of claimants just because people started reaching out. It all started on Twitter. It's in a Twitter space, and there was someone on there, was a securities lawyer talking about bankruptcy, and I was just kind of like, that's not really how it works. So I kind of like started just helping out a little bit,
educating.
Yeah, I mean, look, honestly, I already know all the stuff, right? I mean, so it's kind of easy because a lot of the questions you can imagine, it's just like someone asking you like very simple thing. You're like, what is a IRA? You're like, oh, well, it's this, and you're like, here's a link. I don't know. It's just like stuff that you think like this is so easy to like kind of like give very straightforward answers to. So I sort of got involved in that way, but there are tons of interesting legal questions. I mean, just unbelievable amounts.
Are you doing anything outside crypto? Is there anything else going on?
Yeah, we're looking
Not
at
that
a
you
few
want to talk about.
things. No, met coal
Yeah, but no.
project. Met coal project. Let's see what else. Got some real estate stuff we're looking at recently. Some fitness industry stuff. We had we have a fitness investment. We own a chain of gyms. I say we, but one of my clients does. And so we've been looking at fitness assets. Some of them are still kind of on their back. They haven't really totally come back from the pandemic. And then there's some companies that they were doing D2C and the math they thought penciled out. And now that the pandemic sort of like fervor of, I don't want to say cheap money, but people staying at home and ordering a bunch of stuff online is slowed. They kind of peel back the onion and they're like, oh, maybe our lifetime value of our customer isn't what we thought.
And our CAC is way too much.
Yeah, the CAC is solid.
Yeah, the CAC
LTV
is real.
Well, there's a great. This is great. I get to use my Jim Grant quote. Do you know this Jim Grant quote? He says the assets. We don't know if those are there. He says when you look at a balance sheet, he says the assets. I'm not sure what those are worth, but the liabilities. Oh yeah, those are 100 cents on the dollar.
Yeah, money good.
I think he stole that from Benjamin.
Oh, did he?
I think so. That's a Graham.
Well,
that's Buffett quoting Graham anyway.
Oh, I thought it was Jim Grant. Okay.
Speaking of Buffett, happy birthday to the GOAT today.
92.
Right.
Yes, sir.
That's a good knock. He's 8 short of the ton. See if he can carry his bat the whole way through. That's for cricketers. See if he can stay in the seat. Do you think he can stay in the seat to 100?
I think he could. I mean, he's certainly smart enough, and he's got enough experience to get there. I don't think he'll get fired.
Got the voting block.
Yeah. He did say though that this has been, he said it several years ago, and he said it multiple times during the meetings, but that he expected Geico to get to like number 1 ahead of State Farm by the time he was 100, and he figured like that Geico had a better chance of holding up the bargain than he did, but we'll see. Maybe he might actually be the one that wins that one.
Has Geico slipped? What's happening with Geico?
Geico hasn't slipped. They had not a great. They've had a little bit of a scuffle lately relative to their normal sort of peak performance that you expect out of them.
What, there's some cost inflation in the.
There's definite cost inflation. Medical, legal inflation, and then obviously just it's more expensive to get parts and labor and all that stuff. So, rates can be a little slow to catch up. They had kind of a boom year in 2020 because miles went way down, right? So nobody got in accidents, but premiums didn't fall quite as fast. So it was like a banner. And then I think things kind of swung a little bit faster in the other direction than they were expecting. So it's just navigating through a little bit of a, weird turbulent time. I'm sure they'll be fine. It's just, and the other thing too is like Progressive snapshot as a data feed for your underwriting it's probably a pretty reasonably good innovation that Geico slept on for a long time, and probably fell a little bit behind that. On
what's the snapshot? Is that the thing that you plug into your car?
Yeah, it's like an accelerometer, like real time kind of measurement of your driving.
You can see your rate going up and down.
Yeah,
as you speed up, your rate goes up.
You run that red light, you see your premium raising.
That would help probably. You'd be very safe.
I could see it now. All the Buffett investors or all the Berkshire investors are like speeding around town at 1,000 miles an hour. No, I'm joking.
You need a dashboard that has the depreciation of your car, the cost of fuel, all of those things. So as you're accelerating, you can see how much the trip is costing you in real time.
Ooh.
Drive sensibly.
Now you're talking.
Look out for my new my startup.
That'd be kind of a cool app, actually. That'd be kind of a cool idea. Just right here on the pod. See, we're giving away free ideas. Tobias, come on.
It's a $1 billion idea.
There's
Toby,
no property in an idea. No, you got to execute it. I've done my part. I expect some founder shares.
Yeah, send the royalty check.
Yeah, I always think that's interesting. People sort of, think ideas, or sometimes I'll meet people that think like, oh, don't know if I can tell you about the idea.
Yeah,
I'm like,
you're gonna have to sign this NDA for me to tell you about.
I'm like, I got to tell you, brother, there's just a lot of perspiration that needs to happen. It's really, the ideas are just like, those are easy.
Yeah, execution's tough. If only we could outsource that.
Do you think it's important in investing as well? Like, I'm not going to move around here on you guys. Like, I mean, it's easy to talk about. It's like, what is I like always Cliff Asness, like the saying, what is it? Like, we all know what we're supposed to do to be healthier. It's like, eat less, move more. And it's like, I think in investing, this is sort of another thing that we miss.
Well, you've got the
100%.
additional, with the stuff that you do, there's that additional execution difficulty as well.
Yeah.
You've actually got to go and do it. Like the private equity guys got real execution difficulty in making their buys and sells. That's why I don't do private equity. I like the public markets. You don't like it, you can tip it out tomorrow.
On a whim.
In private equity, it's kind of a hassle to get rid of it.
Yeah, you just sell it back and forth and mark it up all the way to the...
Well, once you're in the little club, you're fine.
Yeah, it's all good.
Do you want to do yours, JT? I probably need to just spend a little bit of time looking at mine.
Okay, let's do it. So this is first of all, a shout out to Brett Schaefer, who sent me this article that's inspired this particular veggie segment. We're going to be talking about the Pacific Crest Trail, which is it's a long distance hiking trail that runs along the Cascade and the Sierra Nevada mountains. And it goes from Canada to Mexico border, all the way through Washington, Oregon, and California.
Does it go through Yosemite?
Yeah. It's
I think I've walked part of it.
Yeah. So it's 2,653 miles, which is, for our international fans, about 4,200 kilometers.
I've walked about 3 of them.
Yeah, exactly. And it ranges in elevation from about sea level at the Oregon-Washington border up to about 13,000 feet at Forester Pass in the Sierra Nevadas. And the route passes through 25 different national forests and 7 national parks. So it's very, very scenic, and actually runs through my backyard in Lake Tahoe, and it's absolutely gorgeous. I mean, you can hike all around through there. There's lots of, do yourself a favor and Google some of the pictures of the Pacific Crest Trail and just kind of go through it. It's absolutely stunning. So in this whole idea of hiking, there's this thing called through hiking, and it's a term that's used to refer when hikers will complete some long distance trail that goes from end to end, like point to point on a single trip. It's not like a loop or anything. And through hiking is typically this very long commitment where you're taking, in this case, for the Pacific Crest Trail, like 4 to 6 months, and it requires thorough preparation and a ton of dedication to train for it. And this one, actually, the Pacific Crest Trail Association estimates that it takes 6 to 8 months to plan, train, and get ready for the PCT. And the average completion rate is estimated about 14%. So most people who attempt this don't finish it. So part of the problem is that hikers have to kind of determine ahead of time where their resupply points are along the trail. And so they can, typically like a town or a post office, a hiker can replenish their food or supplies and cooking fuel, stuff like that. And they can ship packages to themselves at the post office and then pick them up along the way. So there's earlier this month, this British guy named Josh Perry, who's 27 years old, he finished the through hike, and he did it in just over 55 days. So remember, we said that this takes like 4 to 6 months, and he did it in 55 days. He beat the previous self-supported record by 5 days, which is pretty big jump. And there's this concept called fastest known time, FKT, in the hiking world, and it's used for basically like a trail record, like who's done this the fastest. And it's a bit like setting a world record, for sprinting or whatever, but this is just for a hiking version. And maybe even more impressive, he finished just 4 days behind the supported record, which was set last year by this Adidas sponsored ultra runner who he slept most nights in an RV. He had hot meals, sports massages. Like he was going to take the record down, right? Whereas this Josh guy, like he's just out there on the trail with like his backpack, getting after it.
Gentleman jockey wins the race.
Yeah, exactly. He had a better horse. like Perry, when he finished, was actually disappointed because he really wanted to even beat that supported time. And the the reality is that the record-setting through hikes have gotten much harder in an era of escalated wildfires. Like Perry, he was cruising for the first 1,700 miles in California, and he finished that in a faster than any other recorded hiker in about 34 days. So he was on pace to actually like break the all-time record. And he was, he was shuffling and jogging for most of those miles. And he was very aggressive. Like he was sleeping like 6 hours a night, and the rest of the time he was just moving. In some instances, some of the shorter, like fastest known times, like these guys will sleep for like 2 hours for days on end and just be moving for 22 hours. I mean, it's kind of insane.
How long can you sustain that for?
I mean, I don't know. Just
could you sustain that for 55? You couldn't sustain that for 55 days, surely.
I don't think so. No, I think you'd go crazy. I mean, I'm pretty sure you would actually, based on like what I know about sleep chemistry. Like your brain wouldn't clean out enough of the plaque. Anyway, so what happened to just Josh Perry was that in Oregon, there was a trail closure from a 2020 fire, and it forced him to have to find an alternate route that sort of approximated the Pacific Coast Trail. And when he planned this out, he thought that would have been cleared by the time he got to it, 35 days into the hike, but it wasn't. And so he was forced onto this like really overgrown trail. Then there was brush that was really thick, and it took him 7 hours to like bushwhack through 7 miles of this dense trail. And he's falling on wet rocks that normally you wouldn't be going over.
Had to kill a bear with his bare hands.
Yeah, exactly. In fact, he survived a heat stroke while he was walking like in temperatures over 100 degrees. And for several hundred miles of this, he carried a sealed roll of duct tape to bind his right quadricep in case it tore, because he felt like it was like starting to. So at one point, on this, while he got sidetracked, he's delirious, he's dehydrated. He actually began vomiting and defecating on himself. The conditions were so bad that he decided to quit for a little while. But he was like so far out in the middle of nowhere, he just pushed on because he had to get, back to somewhere. And eventually he finishes this through hike, and he broke that unsupported record, but his body's like in absolute shambles at this point, right? This actually wasn't his first brush with adversity. He had made a southbound run. So he had gone before like south to north as he was setting it that just recently. He had tried a southbound run coming from Canada to Mexico, trying to set a record. And after clocking 49 miles per day for about 1,000 miles, which is insane if you've ever hiked before, anything more than like 20 miles and you're just absolutely typically wiped. And that's if you're in pretty good shape. He got stung by a wasp, unaware that he was allergic. And like 3 days later, he collapsed on the trail and had to be carried out by these other hikers. Anyway, so this new record that he just set, it really highlights the unpredictability and the increasing unpredictability of the Pacific Crest Trail and the difficulty of record keeping when a trail's length and course now changes every year due to wildfires. So, and the official race kind of direct personnel of this trail had this to say: with climate change, there are going to be closures. You're never going to have what previous hikers had on that route. So what this really highlights for me, to kind of bring this back to investing, is that we don't really get to decide what the trail conditions are for our investment journeys. Sometimes there are fires that are going to force us onto a more difficult trail where we'll lose time. We'll struggle to push through this like very thick brush. And this has really surfaced probably for a lot of people in 2022. And if history is any guide, I mean, I'm not sure that, it's going to be out of our lives necessarily right away. Like we have to be mentally prepared for a tougher trail, maybe for the foreseeable future. And if we focus on kind of what others had done and strive to beat their FKT, their fastest known time of different eras, I think it's just not very realistic of an approach, and especially if finishing the trail is your primary goal, right? Like that's what we should probably be really thinking about, is how do we finish? So to expect you to put up like 1950s Buffett-like returns in today's era, I think is just kind of questionable to me. It likely requires leverage, too much concentration, maybe options. Like you're probably going to be pushing too hard and maybe not finish. And some people might get through and might get lucky and will get all the headlines when they do it. But I don't think that I think failure is probably the predominant expected outcome of that kind of approach. So, I think you want to be diligent. You want to get in your daily miles. You want to keep grinding with relentless forward progress. And you want to plan correctly with your gear and your food depots. And so that you're, doing everything you can to control what you can. But you don't want to get caught short of food, but you should probably stop occasionally to look around at the beauty that is this whole journey. But if you're in a dead race to actually beat someone else's time under the completely different trail conditions, I think you're going to have a really miserable experience, and you might even be lucky to even just finish. So hopefully maybe we tied some hiking and fastest known time into like what we can expect for our investment journeys.
I like that. I often think about Graham had at least one world war and the 29 crash and the Great Depression. Buffett obviously had a pretty nice run from the 50s through to present day. And then John Maynard Keynes as well had, I don't know how old he was relative to Graham, but he at least had First World War, obviously, because he wrote in the First World War, and then likely he had the Great Depression as well because he was running funds through those. So it's hard to say. It's nice to have the good conditions for your investment strategy.
Yeah, Buffett would say they saw in his investment time, a world war. He saw, or at least his lifetime, a pretty bad flu in the 50s. Like a lot of comparable stuff. He saw inflation in the 70s. Yeah, he saw
still the 29 crash is the worst one. And Graham came out the other side of that and then wrote Security Analysis.
True.
But it helps that Buffett was in the winner's market, the US.
Yeah. Yes. Good point.
What is it? Is it Dimson or someone that has all those time series?
Yeah.
This is like Tobias.
Elroy, Dimson, and Marsh. Yeah, what's that called? What's that thing they bring out? What's that thing they bring out every year?
Triumph of the Optimist.
Triumph of the Optimist. Yeah. Good one, JT. Good
but
memory.
What's there's a French guy that goes back. There's a French economist that goes back. You guys are going to know this probably. There's like a famous French economist that goes back and looks at like
Piketty.
Rates of return from, what's that?
Piketty.
Is that his name? I don't even know.
No,
you could make it up.
I'm being glib.
He goes back to like the 1600s or something to try to look at rates of return.
Yeah.
I can't remember the guy's name. Of course, a French economist would be into this. It's like,
well, there's Mikhail Semenov has put together that 200 years of value, which I love, where he runs back to he uses the 1825 to 1875 data set is like everything that they could find.
Two railroad companies.
That's right. And then 75 to like 1925 is the Cowles Commission data. And then 26 onwards is what's the name of it? Farmer and French.
Farmer French, yeah.
Yeah. It's the French data. Yeah, French data set. Thanks, Investorblog, €10 for JT to the veggies.
All right.
JT's going to have a drink. And we're doing some event. That's not next week, is it? That's the following week.
Yeah, following week, right? We're
doing future proof. I don't know what we're going to do. We may be all doing that from one hotel room. We might have to do a live version from the hotel room and then do another performance.
My understanding is that they're going to have some kind of audio situation set up there for us. So we will. I'm not sure we're going to be able to stream live directly to YouTube in real time, but we're going to record it live from there.
The recording will be up. Yeah.
Yeah. So we'll
wait, where are you guys doing this event?
It's in Huntington Beach. Some kind of conference.
California?
Yeah.
Cool.
Should be kind of fun. Bring a little extra energy to the show.
Yeah.
Maybe we'll get Billy a couple mimosas before we start for them.
Yeah.
Get him some mimosas and put them up on stage.
Yeah, exactly.
Good veggies, JT.
Thank you.
Yeah, I love it.
Let me do
Go do your thing.
Verdad. So size factor. It's not been a great decade plus.
Toby, it's how you use it.
That's what everybody says. That's not true. It's been a bad decade for the small caps. Everybody knows that, right? It's been bad in the sense that they've performed really badly in an absolute sense, but they've also been more volatile. So the risk-adjusted returns are hot garbage, and it's got so bad that people wonder whether the size factor continues to be worth anything or not. When you look back over the full data set, though, the size factor has sort of come in and out of existence, and it has delivered better returns at a better risk-adjusted rate for the full data set. So since the really interesting chart in here is where the guys look at. So this is Verdad. I think it's all of the guys that put this together. It's got Dan Rasmussen, Brian Gingono, and Nick Schmitz listed.
The Verdaddies.
The Verdaddies. I think that's a good one. There's more than 3 Verdaddies these days. There's lots of them.
Another $1 billion idea right there.
It's just
Jake giving it out.
We're just flowing.
That merch is their second part of their business. So just get that Verdaddy shirt out there.
Who's your Verdaddy?
Who's your Verdaddy? There you go, Dan. You can have that one for free.
That's yours, Dan.
He's a listener.
They looked at the small cap relative discount and the 10-year forward returns, and this is the interesting chart. So one of the reasons why there've only been 2 occasions in the last, I think this goes back to 1927, 1926. So there's only 2 occasions where small caps got a lot more expensive than large caps, and that was from about through the 80s, and then again in sort of the between 2012 and 2017, that 5-year stretch in there, they got expensive again relative to large caps, and in both of those instances, they've delivered terrible relative performance relative to the large caps. Where they've been at a very wide discount as they currently are, the forward excess returns over the large caps have been quite big, and so it would look like as the same problem that value had, where the last decade has been partly working off overvaluation or relative overvaluation at the start, to that becoming a narrative that small caps or value doesn't work, to now we're at the point where the discount is so wide that it likely indicates future forward returns that are good. Adequate, yeah. I've been telling that tale for a little while. I think at some point that becomes true, but I like that setup. As a value guy, I like that setup. So I feel good about value and I feel good about smalls.
If you just keep putting it out into the universe, Toby, you're going to secret.
Do you think is that how is that, it's the secret, right? I'm going to secret. That's it.
Toby's got like a seance going on at his house.
I'm burning some
chanting.
I'm burning some joss sticks back here.
Yeah.
Got my little Buffett shrine up.
Yeah.
I'll bring you one next
oral
time.
drums.
Joss sticks or a Buffett shrine? I need a little Buffett Buddha. There you go. There's our third $1 billion idea.
Another $1 billion idea.
Who did the bookends? That was Andrew. Who did the Buffett and Munger bookends?
Oh, I haven't seen that.
Yeah.
Oh, was it Andrew Wilkinson?
Yes, Wilkinson. Wilkinson had the
I could imagine
bookends.
that would be him. Smart.
Yeah, didn't someone do like Buffett and Munger? Can you order like art and it's like a
There's
quote?
a
Like with a bust.
Yeah.
Yeah, that was Wilkinson. I think it was about $900 or $900 each. A little bit too rich for my blood.
I'm frankly a little disappointed you didn't get one for me, Toby. I'm a little hurt, actually.
You got 10 euros from Investor Block, so I'll put that towards
Okay.
something for Christmas.
I think, as someone who's like more in the trenches than like driving people's portfolios, I mean, for me, it's like things have to make sense from a first principle standpoint. So like both the things you guys say, one is you don't invest for like one particular thing. You invest to like in a robust manner, right? Which seems to me like a very first principle thing to say. Now that you're not saying it, but Jake, your story, like it's good to remind me. It's like it's not just about returns; it's about the robustness of it. Given you don't know what's going to happen tomorrow, the next week, the next year, and and the same thing with value and small. Like it kind of fits in that robustness. Like it just kind of just makes sense to me from a first principle standpoint. We were talking about this earlier. We were talking about like whether something's commodity or security. Like the first principles are, it's clearly an interesting place to always be looking. I mean, I don't know from a quantitative standpoint, but I mean, it's just not plainly obvious, but to me, seemingly an interesting place to at least start, right? From, value and small, because it's just, they're just, there's no machinery. There's no bid. There's not like in general. I mean, I don't know what you mean when you say small. Like, what does the data set start? Does it start like 250 million and go up to a billion? Is that small cap?
I think it's indexed. I think it's something like that.
Yeah.
I mean, there's a few potential reasons why the opportunity set has changed, and one of them is that Sarbanes-Oxley made it much more expensive to become a listed company, to the tune of like $1 million a year, which like that's meaningless for a Google or for a Facebook or something like that. But that's a meaningful amount of the bottom line for smaller companies. And so they either don't go public or they wait until they're bigger, in which case they don't get into that cohort that, they would be the ones that are more successful. They don't sell at that point. They just wait until they get bigger, which is what Facebook did. Facebook waited until it was a large cap before it listed. And it's been the trend of these bigger companies that they don't come on until they're huge. And so, the VCs soak up a lot of that excess return rather than the small cap investors. I don't know if that, that's sort of been that's been the narrative, but I don't know if
thesis. I don't know if it's true. I mean,
well, it seems it's not reflected now in the data. So the data says that the valuation dispersion is very wide. I mean, we've talked about this before, that the valuation dispersion seems to be the thing that drives a lot of the return. I know that these quantitative macro kind of ideas, a lot of people just say, I don't care. I just want to look at individual names and do the work on the individual names. The problem is that when you're doing that and you just keep on stubbing your toe and you're not performing very well, sometimes it's because you're not doing a very good job and you're blaming your tools. But sometimes
maybe you
it's
like
also
stubbing your toe.
Sometimes it's because you're swimming against the tide, and you might be if you had a little bit of a better perspective on what was happening, you might not put yourself there. You might put yourself into a winning stream. And right now that might be non-US, non-large, non-growth. It might be everything but.
Yeah.
And that might be the advantage that the macro guys have.
What are your thoughts, and how do you take what you like the kind of approach you do with like Swinson, like David Swinson was always like, go to the places where there's high dispersion. Like if you want to be active, like his view is like, don't waste your time on stuff that's like crazy efficient. Like what, and earn me 100 extra basis points? Like forget about it. Like if you're gonna do anything active, it better be. There was other parts to it, I think, as well. But I think his point was like, just go to the heavy dispersion areas.
Well, there are two heavy dispersion areas right now, as we've discussed. It's smalls in the US and value, and it's also international versus the US. There's huge dispersion. If you look at the discount of Japan versus the US, it's massive.
What are you guys' thoughts on Japan? I love Japan. I don't have any investments there, but
as an investment destination,
like
huge
activism.
It's so much to recommend it.
I love following some of this stuff.
I think
a lot of them are world-class businesses.
I think it's cheap relative to the rest of the world. It's I think corporate governance is heading in the right direction after decades of pretty dismal returns on equity for business owners, and that being a structural issue due to cultures and rule of law and how they just organize their economy. But that seems to be kind of heading a little bit more laissez-faire direction, which hopefully unlocks some returns on equity that all of a sudden now you've got some pretty decent businesses that are also bought at pretty cheap prices. And there's a lot to recommend there.
It's politically stable. And a lot of the businesses are global. So you got big like Sony and other things like that it's amazing how big it is. It's surprisingly big, the whole economy still.
So they're industrious people. I mean, a lot to be admired there.
Yeah, I agree. Here's a good question. Is it better to look at large to mega cap stocks during big downturns and small caps during a steady to higher market environment? From Samson. Thanks, Samson.
I don't know. That's kind of too hard for me.
I mean, in Europe, like European, like I know people say like big cap in the States are down, but like Europe, like I don't want to call them TMT names, but you know what I mean? Like the darlings. I mean, some of these companies are absolutely obliterated in terms of valuation. It's just more to that international theme where people pull back, and I assume it's like, all right, just sell like this stupid like 5% allocation, to this international whatever.
Yeah.
So I guess it makes sense.
Well, everybody's a momentum chaser for the most part. So
That's been a good strategy
Really?
it's
for a
worked,
decade.
worked well.
That's been the strategy for a decade.
As my Jake, you guys,
They're all
will
on the
look for.
beach right now.
Surf that wave to the beach. That's right.
Yeah.
I want. Sorry, go ahead.
Oh, I was just going to say, when you look at that discount of smalls to larges, like part of the problem too is that the larges include Google, Microsoft,
Yeah, I think
Amazon. Like there are good names in there.
I think Verdad had a little more research even this week on if you back those guys out, or maybe I saw it somewhere else. I apologize if I'm referencing it incorrectly, but
Give it to Verdad. They pump out a lot of research.
if you back like some of those biggest names out, like you
Bleak.
almost can't see the difference. I think, right?
There's been no performance, or there's been no interesting. In terms of performance, or in terms of valuation, and like
performance.
Yeah. Okay. Oh, because that seems to be reflected in their weight in those indexes too.
Well, how do you get to be big? Like you get big, and that
Have a good run and
creates a lot
have
of
the
market
multiple
cap.
expand. Yeah.
It creates a lot of market cap.
Win your category as your category beats everything else, and get the multiple expansion at the same time, which is why they've traditionally not been the best places to be, because they've tended to be
they started
stretched.
calling them Terra caps too, which I kind of thought was a fun terminology.
What is that? What's that
Terra?
mean?
It's bigger than mega. It's a
Uh,
Terra cap.
We got to invent new terms.
You know, speaking of like how momentum, like everybody is. These are. I once had an LP. It was like, oh yeah, man, super long term. I get it. Yeah, man, 3 years. Yeah, I gotta.
How many
And it
years?
was like 3 years. He was like, yeah, super long term. I know that 3 years, right? And he says, so how are we doing this month? And I was like, sorry, what? It's the 9th of the month. Like, we're not doing anything. There's no change. I'm gonna go with unch.
Hunch. Yeah.
I was just like, as I realized, I was like, oh geez, this is not gonna work.
Not going to make it.
Yeah.
How did you start
I
off?
think-
Did you ever do small cap stuff? Were you, or was your way into it through bankruptcy?
You know,
Investing.
I wanted to be Warren Buffett. So for me, I guess like everybody, and for Buffett, for me, like when I was a kid, I kind of idolized Buffett in probably an unhealthy amount. So I really looked at him like almost like a father figure, you know, sort of like teaching me about life and about business. So when I got into investing, I was like, Graham, Buffett, like, don't talk to me about any of this other crap. Like, the books are, you know, it's heresy. Get out of here. Like, balance sheet. I used to say, I think when I first started investing, I said, I'm a balance sheet value investor because I don't want anyone to mistake, like, you know, what approach I would use. Like, no, none of that, you know. Anyway, so I started in that. And then I realized when you look at the net screens, I was like, wait, this little, like, these are the cheapest ones were always like a $5 million company, a 10 million, you know, these little tiny companies.
And they've been there
like,
on that screen
Yeah.
for 10 years.
It is amazing how you can run the
It took
screen.
me a minute to figure that out.
I run it now. It's some of the same ones I was writing about on Greenbacks in 2008.
It's all the same guys.
That's how I met Tobias. I mean, you had Greenback. I remember reading your blog. It's like, wait, there are other people that are into this? Like, whoa.
Oh, it's a disaster.
Just,
You can't have more
just
than
the
2
three of
people at
us.
any one time.
Yeah, it's
Jake
like-
wasn't you were clever enough not to put it like in on the
Oh
web.
no, I wasn't. Well,
Oh,
yeah.
did you? What which blog were you? Did you
No,
run a blog?
I didn't. I guess I didn't. I didn't write that way. I mean, I wrote more letters. They weren't public for a long time, so.
Everybody has this idea that they're going to be like Buffett and buy their net, get control of their net, and then turn it into Berkshire Hathaway. It turns out when you buy control of a net, it stays a net. It's tough. It's really hard to transition out.
Yeah.
Yeah,
And
then
that
you're
whole
like,
idea
don't-
of running off, into creating this excess capital that you're going to redeploy turns into, where'd
Just
all the money
managing
go in the bank?
fires
Like,
all the time.
I'm gonna
Yeah.
wait. I got to put in more equity. This is
Yeah, that transition that Buffett made from textile maker to insurance was inspired. That's a big jump.
Yeah,
That would be a hard
mean,
move to
Geico-
pull off today.
you guys were talking about Geico, right? I mean, I don't know how many X's Geico is, 1,000x, a gazillion x, a trillion x. I mean, let's like really unpack the fact that this, that's why the punch
Especially
card
that
is such a
first
great
half
way to think.
that he bought. I mean, that was like, he bought that well. Second half was a little bit more expensive, but
Did he buy the first half in it when it was sort of distressed, when it had transitioned
Yeah.
away from the founders and they
They
were
were-
underwriting too much bad stuff?
they had a really bad stretch and they were like, they might have gone bankrupt.
Yeah, they were really
zeroed out.
close.
It was close.
Didn't he? Was there a private placement that he did or something? Like, wasn't there like it? Literally,
don't know.
it was an investment that he first.
That he
lost money on
supported.
because
He had to support it, did he? Initially.
Right.
I'm not sure. We need Adam Mead to hop
Yeah.
in.
Come on,
Give us
Buffett. Come
the-
Well,
on.
Bloomstrand
Come on,
would not
Grandpappy.
say-
Bloomstrand would correct us right now. We're probably like, no, dummies. This is what happened.
We kind of need Bloomstrand in the corner, like the NFL when they switch to the ref. Who's
Yeah.
He explains the rules to you. I don't understand. Just explains it.
Yeah. What do you got on this one?
Explain it all to us.
That's not a catch.
Yeah, this is a good question. I saw this earlier. Thanks, Lotto. Have there been any good post-reorg equities in the last 5 to 7 years? I haven't seen them. It used to be a great source of pricing and efficiency, but now it seems like everyone and their mother is wise to them, like spin-offs. Yeah, I agree with that. There used to be lots of ideas that floated around. Like that was the thing for a long time there, but I haven't seen anything. I haven't even.
Still pretty fat spread on Blizzard, isn't it? Or Activision.
Well, that's merger. Is it
Yeah.
really?
That's what I heard. I haven't looked in a little while.
What about the Twitter spread to Musk?
That could be something. I don't know.
Twitter is such an amazing thing. What do you guys
agree.
think about Twitter in
I
general?
love Twitter.
Isn't it like it's amazing they can't monetize? I mean, I think they will.
Amazing.
But I can't even get my DM straight. Like, I can't search DMs. Like, what the heck is going on?
It's rough.
It's such low-hanging fruit.
Right.
And I just feel like Musk could make so much money out of it if he could just like run it sensibly and fix those sort of things like that. Because it's one of those things, it's hard to get into Twitter a little bit because it's not, I don't think it's intuitive because it's not pictures. You got to read it for one thing. So that excludes a lot of people.
I'm out.
Reading.
But then once you're locked into it, it's like, it's my news feed and it's the way that I connect to all of the experts in various different fields, and I use it as a marketing tool as well. So
It's often hilarious. I mean,
That's
the best
amazing.
jokes are there. And they're there in 2 seconds of whatever it was that just happened.
That's right.
The creativity that gets, if we could even apply that to a more productive, use for humanity, God, we'd be all gods.
It's not unproductive though. Like it's the fact that there's an event that can happen and then somebody has some analysis on it and then somebody else has a joke on it. And then 4 hours later, it turns up on CNN. And I'm like, we've moved
We
on
already
already.
ran that one.
Something
yeah.
else is happening.
Yeah.
But come on,
It's
I
got to be
mean,
worth something.
Bezos eating a hamburger memed a million times. That's not moving society forward, is it, Toby? Come on.
It's
You
funny
got
though.
somebody
like,
you need to take out of your feed.
All right.
that was funny. It was good. There are a few different takes on it.
But seriously, like I find myself like, so you have to leave the platform to actually talk with people because you can't talk on the platform like on DM.
Through
You
the
can't
DM.
voice call. You can't. The chat is terrible. There's no voice notes, so the DM is just an absolute mess. And I assume for like actual creators, like it's quite, you don't really monetize with Twitter, even though it like is good for marketing probably. Right.
But I thought their spaces was excellent. Like that Clubhouse, as soon as I thought Clubhouse was going to go away pretty quickly. But when Twitter brought in spaces, this is a no-brainer. And now they're talking about getting rid of spaces.
Are they really? It seems
What?
like those
Something
are
like
happening
that.
all the time.
Or they're changing it to circles or something like that. They've got this,
Okay.
they're just in there desperately trying to shoot themselves in the foot all the time. Like I don't get it.
To me, it just, again, it speaks to how, I wouldn't say how great, but how there's definitely a lot of
It's
Twitter
robust.
platform.
Yeah.
You can.
It's robust.
It shows that you, like Buffett says, you can get one. You can get
It's a ham sandwicher.
run by less than superstars, and it's still there. It's unkillable. I don't know what it's worth though. It's hard because it's clearly it's under monetized right now, right?
I
You gotta
kind of
figure
think
out the
things that are really
monetization.
great. Don't you think things are really great or really hard to value? And so that's okay. That's part of being really great. Like, I don't know. It's kind of, I mean, I guess that's kind of like a silly thing to say, but you should probably pay a lot for something that's like super robust. That's like, you can't really think of any way to kill it.
Yeah, not all greatness is cash flow.
Yeah, you're saying it could be great and never make money.
Yeah.
Just like a public good.
Sure. Where the profit versus value creation falls doesn't, always necessarily accrue to the owner of that, of
That's a
those
good point.
assets.
Yeah. No, I hear that. No, I hear that.
Like they're occupying that intersection. Like you got to be able to stick a toll booth up at that intersection and charge something for it.
One would think.
Plenty of people
great
have got that
story?
right.
Have you guys ever read the story about the guy that like bought it was like a tiny $100 or $150 million market cap company that he bought? It was the bridge that connected like Detroit
No way.
into. Do you know
He bought
the
a toll
story?
bridge? No.
He
Detroit
literally
to,
bought
like,
a toll
Windsor?
bridge. It like goes from Michigan into Canada. I wish I could remember the story. And he bought it for like a few $100 million. He's over like $5 billion. It's literally a toll road. And you know what else he does? Y'all love this. He strategically buys land along the coastline so no one can build a bridge, because they were talking like building a competing bridge like 10 years ago. And
he's like, I got some land I can sell you. The price of
think
the land is
he was like-
$5 billion.
If I remember
Yeah.
right, there are two bridges. There's one public and one that's private that goes into
okay,
Windsor.
then he must own the private one.
He must
It's
own the
like,
private one.
one of the stories where I love reading about stuff like that, because I'm kind of a believer that you just need one good investment decision. Like, I know I love Buffett because he's public and we learn a lot from him, but he could have just done Geico and just like gone home. He didn't need to do Berkshire, didn't need to buy John Mansfield or whatever else he did. He didn't need to do all these ancillary
I think
things.
it's C's. He got C's, right?
yeah,
And
cash
C's
flow,
has been
billion out
could
of
have just done
C's
C's.
there's
and
not much
yacht
you can
life.
invest. If you take the money that you get out of C's, which is now in the billions of dollars, and you just stick that into the market, like you just reinvest. So
You don't even have to. You don't do anything. I mean, just literally
that's like
put it
that's
under your
gargantuan.
mattress.
That's gargantuan. What did he pay for that? 27 million or something like that?
25.
25.
I think 35 with 10 in cash, something like that.
Roll out our Buffett fact checker.
Yeah.
we
Go to
need a Buffett fact checker.
I
What
mean,
about the
so all of
Kilpatrick
us-
guy? We can't get him.
We're all idiots here we're looking for metaphorical toll bridges.
Yeah, he was
And
just
this
looking for
dude's
the
just
real
like,
thing.
Hey, dummies, you buy the actual physical toll bridge. Like, go straight to the finish line.
I'm sure there was some turmoil. It's
So
kind of like,
smart.
what's the guy that owns the Irving company? That's another one. It's like one deal, man. One deal. The Irving company, what's his name? He's a famous developer. He owns like basically all of Orange County. Yeah, but it was Irving was it was Irvine, California was orange groves. It was like, and I'd read in a book, which is actually a great book. I don't have it here, so I can't remember the name of it. But there's a great book by the Tolman guy. He was a famous real estate guy, and they had bought I think it was called the Irvine Company, which basically basically the huge, I think, ranch or like orange groves. And
His name wasn't Irvine.
who?
Man, Irvine Companies. Anyway, sorry,
No, this
I'm
guy's name's
reading
like
that.
Braun. His name's like
Okay,
Braun. You can
okay.
Google it. There's the buyer of it, the guy that owns it today, is like worth $15 billion or something. And he did one good deal. That's my point. It's like I always one good deal stories because it's somewhat true. You kind of need to get a hold of like a rocket ship and just realize it's a rocket ship.
The trick is though not selling it, right? Most people buy it and then
Yeah, the trick is
you get
not
that
selling it.
run up, and then before it mean reverts, you got to sell out of it. Trick is just to like go to
Munger-
sleep.
Well, I don't know about that. I don't know. Okay, maybe.
Munger has that story about the guy that bought all the land around Stanford, John Arrington or something like that. I'm probably not getting that right, obviously, but who's actually, funny fact, the father-in-law to Mark Andreessen. I think Andreessen married his daughter. But anyway, he just bought a bunch of orchards around basically all of Silicon Valley and has just developed that. Never left that little 15-mile area and is like multi-billionaire from that one smart place. And Munger uses it as a circle of competence. You don't have to go too wide. You just need to make sure you stay within it.
It does help to be buying land in California right near Stanford, though.
That was a smart move.
Yeah, but it was a long time ago.
Hewlett Packard, and you had some other stuff that was maybe already there, but it wasn't obvious that that was going to be such a place where money from all over the world was going to come, in there just like a torrent.
There are some ghost towns around that were once boom towns.
Sure. Didn't we
It's
do one of
tough.
those on a show at once? I think it was Bodie. I talked about it.
Yeah.
Yeah.
Good one.
Yeah.
All right, folks, we made
Made
it.
it.
Thanks, Tom.
Tom, thanks for
Yeah, thanks
joining
for
us.
having me on,
It was fun, and we appreciate you hopping in.
Yeah, good to get that crypto update.
Yeah.
Yeah, go ahead and send over your crypto and I'll get you an NFT, guys. It's not a mess of mice.
Yeah. Soliciting.
All right, thanks, folks. We'll be back same bat channel, same bat time next week.
Cheers.
Peace.
Ciao, guys.